attorney Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a LawCast series detailing the OTCQX listing requirements. Over the next few LawCasts, I will give a high-level summary of each of the eligibility requirements related to the OTCQX. In order to qualify for an OTCQX U.S. issuer, a company must have $2 million in total assets as of the most recent annual or quarter end. As of the most recent fiscal year end, have at least one of the following: $2 million in revenues, $1 million in net tangible assets, $500,000 in net income, or $5 million in market value of publicly traded securities. A company must have a market capitalization of at least $10 million, meet an exemption to the penny stock rule found in Rule 3A 51-1 of the Exchange Act. That is, the company cannot be a penny stock. Not be a blank check or shell company as defined by the Securities Act. Not be in bankruptcy or reorganization proceedings. Be in good standing in its state of incorporation and in each state in which it conducts business. Have a minimum of 50 beneficial shareholders owning at least one round lot, which is 100 shares each. Be quoted by at least one market maker on the OTC link. Have a minimum bid price of 25 cents per share for its common stock as of the close of business on each of the 30 consecutive calendar days immediately preceding the company's application for the OTCQX. If there has been no prior public market for the company's securities in the U.S. and FINRA has approved a Form 211, then the company may apply to OTC markets for an exemption from the minimum bid price requirements, which exemption is at the sole discretion of OTC markets. The company must have GAAP-compliant audited balance sheet as of the end of each of the two most recent fiscal years, or as of a date within 135 days if the company has been in existence for less than 2 fiscal years, and have audited statements of income, cash flows, and changes in stockholders' equity for each of the 2 most recent fiscal years, or such shorter period as the company has been in existence, and must include all going concern disclosures, including plans for mitigation of such disclosures. The company must have GAAP-compliant, unaudited interim financial reports, including a balance sheet, as of the end of the company's most recent fiscal quarter, and income statements, statements of changes in stockholders' equity, and a statement of cash flows. The company must be included in a recognized securities manual or be subject to the reporting requirements of the Exchange Act, and the company must have an OTCQX advisor, which was previously called a Designated Advisor for Disclosure, or DAD. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance and producer of LawCast. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.